Hi everyone, my name's Tim Fairweather. I'm a day trader. Can't even remember my intro. Hi everyone, my name's Tim Fairweather. I'm an Aussie day trader. And in this video, I'm going to show an exercise which I think traders should be doing each day to help improve their live trading. This exercise is called big bars. Let's get into it. Okay, I've got my chart set up here. You can see I've got the micro E-mini set up, not the ES chart. I think most traders, well, we know statistically most traders are not profitable. And therefore, if you're going to lose money, why not just lose a small amount? So MES makes sense. So what we're going to do is, firstly, we're going to select. So step one, this exercise is called big bars. This exercise is super simple, but super valuable. So what we're going to do is we're going to mark up all the big bars on this chart. What's big? Well, it's relative to the size of the bars next to it. So let's just go through. Is that big? I think we've got them all. This one, maybe I've missed a bar or two, but I think in this video, you get an idea of how to practice this exercise. And it's way more important to get the practice reps in than if you miss a few bars on the day. So step one, we've marked all the big bars. What's step two? We're going to ask what happened before them. Now, you've got an option on TradingView to use market replay. So I can do that. Or you can just cover the chart if it's printed out, or you can just move it to the edge of the screen. Either way, so you can look at the chart and ask yourself, when that close happened, what happened? How come everyone in the market agreed on what came next? And this is the skill we're building, so let's go. So we know we've got a gap up, okay, about 14 points. We also know we've got a failed breakout or a potential failed breakout to the left-hand side, okay? So what I'm going to do is I'm just going to put a little marker on there, because when we're breaking out of a trading range, what's really important is a breakout and follow through. And that follow through is so important. In my view, I can't prove this, because that gives me the confidence that there were new traders who traded the breakout after we left the range. They're pretty confident we're going out of the range. So here, we don't get a breakout and follow through once. Then we have another attempt. We don't even get a close above that bar. So at this point, what's happening to that high one? Now, I took that high one on that day, but I took it with a wide stop because I thought to myself, well, this is a pretty strong bull leg. That's the moving average. And my scale in, I had one position in the middle and then one position actually just below, just at the close, which didn't get hit. So the trade ended up in a small profit, but really it was a failed trade, to be honest. So here's a failed breakout and follow through above the high. So what happens when this bar closes? Now, when we're live trading, we've got about 3 seconds to make a decision, place an order, boom, 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 get everything done. We've marked the big bars. What happened before them? So at this point, if I'm a bull, buy lower, I'm out. If I'm a bear, I'm short and it hasn't hit my stop. Okay, I'm short and it hasn't hit my stop. So what are traders going to do at this point? Well, anyone that was long is now selling. And anyone that's short or who didn't get short had an opportunity for the first time to sell above a bear bar. And that's what you want to do. In a trading range environment, I want to sell and sell higher. And that's the first time I had an opportunity to sell. Do I think every trader hold it to every part of that bar? No, I don't. I think there are a whole bunch of places for the market to test, and they probably got out somewhere in there. Okay, so that was a big bar. So that's one. Now we know there's a big bull bar coming up here. So what happened here? We had a big bear bar and traders thought we've broken out of the top of this range. Maybe we're going down to the bottom of this range. This is a big bear bar. I want to sell. 10 is bad follow through. And if you're a more experienced trader, you've got bad follow through up here, bad follow through down here. You know we're in a trading range or an environment that's going to be some kind of a trading range. Okay, it's not just going to be a clear trending environment. So immediately, any trader that's sold below 9, okay, let's imagine I'm one of those traders that's selling there. As usual, I can't sell one tick below the low, so I have to sell the close. So I sell there. That's really not the follow through I wanted. I took a big risk. I really need this trade to work out. This is one of the best features of TradingView. Look how I'm back to zero. There's an inflection point. There's a break-even point. This is telling me this trade is not working. And what did a lot of traders do? They flatten the position. If I'm a seller, that means I'm buying. And if I'm a bull, I'm buying. So what happens? It creates a big bull bar. See how easy this drill is? Super valuable. And every day you get new opportunities. Went down, we came up. So now what's happening? Well, we've had a bear breakout down. We've had a couple of legs sideways to up. 1, 2. And now we've got a sell signal. So if I'm a bear and I'm short here, I've got a wide stop, I'm not worried about this. I was probably expecting to sell higher. For everyone else that was short or were looking to sell, this is their sell signal. Where's the stop here? Well, it's probably the stop that the other bears were using at the lower high. You can also use the high of the day. But either way, if I'm long, I've had a couple of legs up. These bars are not strong, lots of tails. It's not doing this. It's going a little bit sideways. What's happening on the next bar? Everyone gets out. Well, we know the next bar is going to be big. Why would it be big? Well, if I was a bull and I was buying at the low of the day, that was a bit tricky. Buying lower, buying lower. What's happening to all these bull positions? They're failing. Where are possible edges to this trading range? Well, it's not super clear. I could draw a million lines down here. The point is that they're all 10, 15, 20 points away from where I am currently. So if I'm long and I tried to buy below that bar because we got a new high, I think this is a higher low, I think this is a bull trend, then what's happened now? That idea is failing. And it's failing on this bar, and it's about to fail below this bar. So bulls are going to exit their position instead of scaling in, and bears who are short or didn't sell have got a chance to. What could the sell be? Well, either you've got to stop up here and you're selling a low one, or you're looking at a bear spike, you've got an inside bar, now you've got a sell signal. But at some point, all these bears are going to do what? They're going to sell. That's a great looking entry bar for that sell. All those bulls got out. Any of the bulls that didn't get out, what are they going to do now? They're going to look to get out below that bar. And we should go somewhere to the target. Okay, and then we pause. You see how easy this exercise is? It's to get an understanding of what happened before that bar, what was the pattern that was happening, so that in real time, I've got a way to practice and improve that skill. So I can see, okay, if I'm long and it's a bull channel, I don't want to close below that bar. Oh, bear closed, I'm out. And then I'm back to flat and I can take a new decision. Now, what happened on this bar? Well, this is a strong bear spike. Traders were looking to sell the moving average. The traders looking to sell above that bar. Traders looking to sell the moving average. Do you place a sell there with 4 bull bars? No. 4 bull bars is a place to buy. So this is an area where I think bears are going to give up. Bears might get a sell signal, but I think after 4 bull bars, they know there's more up. The sell signal's probably up here. What happens? We break through. Limit order bears say, yeah, that's fine. We'll just sell a little bit higher. Well, what's happening to that sell signal? That's not working either. So now you can see another exercise I think you can practice every day. What's my recommendation for practices? Well, you really need to do any of these exercises, 50, 100, 200 times to reprogram the brain to see this pattern. What's a more realistic way to practice? Can you do it 20 or 30 times, every day or every other day for 4 weeks, for a month? I think that's reasonable. You might not need to do it as long as that. And then at some point, you fold that into your regular daily practice, and you can do this exercise all day. It doesn't take very long once you get familiar with it, but I think it's a really valuable exercise for you to do to add and build your trading skill. Thank you very much for watching. My name's Tim Fairweather. See you later.